What's up, guys? Tex here. Today is Friday, February 7, 2020. Thanks for joining me. So in today's video, I want to share with you some live footage that I captured from my trading today. We're going to look at two trades that I took, one on Apple and one on Tesla. They were both options trades, trading the current day's expiration, and they were both losing trades. So I'm finishing the day red, but the good news is my red day today is about 2 to 3 times smaller than my average winning day. So I was able to keep my risk really tight. Even though I have a really relatively high win percentage of about 72%, I still take losing trades, and I still occasionally have losing days, of course. And a lot of times, we love talking about our winning days, but we learn a lot from our losing days. So hopefully this video is helpful to you guys, give you a little bit of insight as to when a trade doesn't work, especially when you're talking about trading options. And on the day of expiration. So if you find the video helpful, please hit that like button. That really does help me out. I always appreciate that. And of course, if you have any questions, feel free to leave those in the comments below. So without further ado, let's dive into the video. All right, so before we hit play on the video, just a really quick analysis here on Apple, sort of my trade plan coming into the open. Apple opening with a gap down. Here is Apple's close. That's actually its previous high day as well. And the open is down here. All right, so it was just shy of about a 3-point gap down, almost a 1% gap down, pretty decent gap down on Apple. And here lately, when it does gap down, it tends to retrace some, if not all, of the gap down. So my thesis was to see if Apple could get a quick wash out of the open, and I really like this level right here. This blue dashed line is marking Apple's previous low of day. You can see the spike low coming in there, so there it is. If we could get a quick wash into that previous low of day, I definitely would have been interested in grabbing some calls. That would have been just ahead of the 320, so I would have taken the 320 strike price on that one with today's expiration again. Would have looked at scaling out on any push higher off that previous low of day, probably into your pre-market low coming in right here. And with the benefit of hindsight, you can see we did get the move, exactly what I was anticipating, kind of a short squeeze move higher, some nice volatility coming in on that squeeze, which would cause the options contracts, those calls, the 320 calls, to really explode in value. But unfortunately, the move came after I got out of the trade. After the trade, basically, I lost conviction in the trade, and we'll see that in the video. So the point being is I was looking for that quick wash down into the previous low of day. We didn't quite get there, though. What I noticed is that we caught support a little ahead of that. And if I look at my volume at price indicator, we'll notice it kind of creates this this bell curve where you have a lot of contracts that were traded within this area. So if we draw a straight line across kind of from the bottom of that that volume distribution area, we'll notice that that's right where we caught support, all right? And so it's just ahead of that previous low of day. So as we caught support there and we really started basing, we kept getting bought up, that's when I took my position. A really small position, was looking to add in if we got the confirmation move higher, which of course did come a little bit later, but after I was out of the trade. Now, on a trade like this, I decided to risk off of this initial morning low where Apple was basing, rather than risking down to here, which is really where I was hoping it would get to initially in the morning for me to take the position. But when I saw it kept holding before that point, I decided to go ahead and get in, and that way I was in if the move came, but I didn't want to risk all the way down to there because I knew if we cracked this basing that we would probably come through that previous day's low as well because it was so close, especially if we cracked with volatility. It's just too close, and I don't want to be holding past that, really, especially when you're talking about trading the current day's expiration on those contracts. All right, so that was really the trade plan. Again, there was a lot of meat on the bone to the upside for Apple to see some kind of a squeeze higher with the potential of shorts giving up on their positions, which, like I said, ultimately came with the benefit of hindsight, but not before I ended up getting out of the trade. So let's go over to the video. Let me hit this. We'll hit play here and switch our view. All right, there we go. All right, so what we're looking at here is Apple's 5-minute chart, 1-minute chart, and here's the initial move down. You can't quite see Apple's previous low of day. It's out of frame, but it's down below us about 320.25. We found support here around 320.80 area, 320.70. And we'll notice when we look at the 1-minute chart here, every time it comes down, it keeps getting bought up. All right, so it's washing down right here. I'm watching it would come down. We put in a marginal new low here I'm watching this very closely. I'm thinking, all right, if we get that, we get that wash down into the previous low of day, I like it. If we hold again here, I'm going to get in. And right here, we get sucked up. You see the green coming through here. People hitting the offer. The price gets sucked up again, leaving these long wicks. I've talked about the subtleties of that. That's telling you there's a lot of buyers sitting down here, right? Buyers keep buying it up here. So I'm in with 2 contracts, really small size for Apple. That's $2.10 a contract. So really, really small size and very speculative position at this point, because for all intents purposes, Apple has not proven to me that it wants to retrace that gap. Right now, it's actually proven to me it's weak. It's underneath the VWAP. It's kind of creating a doji indecision candle here on the 5-minute chart. So you would actually believe that most likely the next 5-minute candle here is going to come crashing down. So I don't want to be in with huge size here, but I see in the tape, I see in the chart here, it keeps holding. Every time it comes down, the bids keep propping it up. The offer keeps getting slammed. And so every time it keeps holding here, it keeps giving me just a little bit more conviction that, the shorts will probably end up giving up on their position. And that's what I'm looking for. I'm looking for that short squeeze that's going to create that volatile squeeze higher. And that's when those options contracts really explode in value, is when that volatility comes in. All right. So I kind of want to be in ahead of that move. I'm trying to anticipate that move, but at the same time, because I am obviously in early for all intents purposes, Apple hasn't proven me anything other than the fact that it's likely to go lower. At this point in time, it's 50-50 at best. I certainly don't want to be in holding my full position size. There's always room to add, right? So I did add one more contract there on that quick dip down just to get a little bit better of an average price. So now I'm up to really my ideal speculative position for an early trade like this, looking for the potential of adding into the position, taking some contracts out on a move up here into the pre-market low. But once it confirms, looking at adding and taking profit on the way up as we work through our potential resistance levels to a complete gap fill would be the best we would kind of expect out of the trade. So we're up on the position right now as Apple's trying to push up over that 9 EMA here on the 1-minute chart. But we'll notice that it keeps getting stuffed, right? So the same that it keeps holding here, it also keeps getting stuffed. So it's really a battle going on right now between the buyers and the sellers. So it's 50-50 at this point in time, clearly, right? The sellers aren't giving up and the buyers aren't giving up. So you end up with this very choppy kind of basing going on here. So my conviction was really more to the long side than the short. I didn't like it short because of the fact that you had that previous low of day not that far away. So for me to take a short right here, just the risk reward wasn't there. There was better reward on the long side. And so, based on what I was seeing in the price action, that was my trade plan. But unfortunately, what I'm seeing here is it had every opportunity to go here, and the shorts, the sellers really stuffed it down. Just didn't want to let it go. And now we're coming back down, really struggling here. Doesn't look good. So what I did right there is I actually sold one contract for a loss. You can see I realized a $19 loss on that one contract, just sizing down a little bit. I'm going to give it one more chance to go here. So I see that we hold again here. All right. And now we're pushing up on this candle. And right here, I definitely want to see this go by now. Okay. If this doesn't go by now, I'm really going to start to lose conviction on this trade. And the more, the more this struggles to go, the more likely I'm going to say, yeah, we're bear flagging. What comes after that? A substantial move lower. And I do not want to be holding options contracts. I don't want to be holding calls anyways. When you get a volatile move lower, especially on the day of expiration, because those contracts will absolutely melt in value. And we'll see a really good example of that with Tesla after this in just a minute. All right, so I'm giving it every chance in the world here to go. This is it. If it doesn't go here, I no longer like the trade. I'm going to go ahead and just take it off. Again, if the trade isn't doing what you were expecting it to do, sometimes it's better to just get out of the position, especially when you're talking about trading options on the day of expiration. Because remember, the longer that it sits here and chops in this area, even though it's still trading right about the same area that I bought the contracts, the more time decay is going to really impact the value of those contracts. All right. So as I'm watching this here, it didn't go. Really starting to lose conviction in it here. So I think right here, yeah, just put my order out to go ahead and just shut it down. So took a $35 loss on that one. And in hindsight, it did dip just a little bit lower, almost tagged that previous low of day. But I think a few candles later, if I had waited it out just like another 4 or 5 minutes or something like that, I can't recall, it ends up squeezing. It ends up doing exactly what I thought it was going to do. So that always sucks when you're right on a trade, but you're wrong on the timing. And that is part of trading. You're going to experience that a lot. You're right on the trade idea, but the timing is just off. And with options contracts, it makes it that much harder when you're off on the timing. So no big deal, but controlled the risk. Obviously didn't do what I wanted it to do, so I walked away with a $35 loss versus if it broke down substantially here, it would have been way worse of a loss than that. So there is that trade. Now let's go and take a look at Tesla's trade. So we'll switch to Tesla's charts and the time on that one. There we go. All right, so what we're looking at on Tesla is a classic or not necessarily a classic, but definitely a flag break long type of setup. And what that is, I've talked about it before, is you have your morning high and you've got a trend line coming across, so you anchor it to your morning high and then you anchor it to your lower high there. And you're looking for a break, a long setup to break above that trend. And more importantly, you're looking for momentum to come in on that break to give you the confirmation and the conviction in that break actually succeeding. All right. Now, what I do like about this particular setup here is the fact that we have 3 layers of support here, essentially. You have the previous close sitting there, you have your pre-market high sitting there, and you also have that 50 EMA sitting there on your 1-minute chart. Now, granted, Tesla is really trading up and over the VWAP, and you can see it's clearly not really been super respective of the VWAP, but it's currently trading through the VWAP. So with it trading right through the VWAP, kind of under the VWAP right now, it's probably not the best of setups. Plus it's Friday, plus the volume is, relatively light. There's pretty light volume comparatively speaking, right? What you want to see on a setup like this, as I pause the video really quickly, is you do want to see that volume come in. All right. So as we watch this play out, we'll notice that the volume never really comes in to give me the type of conviction that we're going to see the momentum that is required for taking an options trade like this. So what's really, really important with options, if you're not buying into weakness, if you're not buying calls into weakness, or you're not buying puts into strength, right, then you're not going to be getting really super low prices on those options contracts. So in order to kind of counteract that, you've got to make sure that you get that momentum. You need that follow through. So setups like this work really great with options, but only when you have that momentum, only when you have that volume that comes in and gives you that significant push higher. You need that volatility for the expansion of the options contracts, all right? For the expansion of the premiums to gain value essentially in those options contracts. So as Tesla's pushing up into the trend, I'm watching this closely. I'm eyeing the 755 calls because the break of trend is right there at 754. So 755 is close enough to in the money. Here we are. I'm watching the tape very closely. Watching the boom, look at that huge orders coming through on the offer, and I immediately hit the ask as that was breaking through. However, I'm watching the volume here and I'm not seeing a substantial increase in volume. I would usually like to see a substantial increase in volume, and there's still volume coming in, but it's not noticeably higher yet. So as a result, what's happening here is it's actually struggling, right? We're not getting that real clean squeeze, and that's what you want to see with options. You want that volatility to move in your favor to really get the expansion in the premium of those contracts, right? So what's happening here, you'll notice that I'm immediately red on the position, and I actually go pretty red for quite a bit. As it comes up, we're trying, but I'm still red. Even though it's pushing up, I'm still red. Now I go a little bit green. Now I did put an order out at 12.90 at this point in time, and I did that because it's $1 above my entry price. I just threw an order out at 12.90 just in case someone grabbed it off the offer and got me filled. Because again, I'm not really getting the kind of conviction that I want for a trade like this. You can see the volume there on the break of trend. Yeah, it's higher than the previous volume bar, but it's really not noticeably higher. I would want to see something, very noticeably higher, and I'm just not seeing it. So I'm losing conviction in this trade. I'm not seeing the type of follow through that I would like to see on a flag break like this. And furthermore, as we pull back into the trend, now I really need to watch this closely to see if we hold the trend. So I put the order out at $12.90, $1 above my entry price, to see if I would get filled. And then if the trade started to work, I could always add back in and really ride the momentum up, maybe as high as, that initial morning high right there. That was the idea, but without the momentum, without the volume to really confirm for the follow through, it just meant that the trade was probably going to fail. And unfortunately, you can see that here is an order at 12.70 that got filled. So let me unpause the video again here for you. I got so close to getting filled there, but no, I did not quite get it. 12.70, I'm sitting on the offer there at 12.90. So unfortunately, yeah, no fill, but that's okay. I mean, that's not where I wanted to get filled. So as I watch Tesla pulling down into the trend, obviously a trade like this, your stop is clear right there. You don't want to see it break below the trend or certainly the VWAP. All right. So as we watch this play out, you can see my P&L here jumping around. I'm down 160, right? And it really hasn't gone that far against me. So Friday, day of expiration, and with contracts that expensive, again, $11.90 a contract for these Tesla contracts versus $2.10 for Apple. Huge difference. So that, the more expensive the contracts, the more risky it can be. So always keep that in mind. So I'm giving it every opportunity in the world here. It's coming down. It's holding trend. It's holding VWAP. So at this point in time, this is where I would definitely want to see it go. If it doesn't go here, I'm out. I am not going to stick around and wait. All right. So boom, I don't like it. I'm out. It should be going by now for my liking on a setup like this. It didn't. Gave it every opportunity to go. Let it pull back into the trend and hold. And it's still not going. So I'm out. So I ate $115 loss on that. So I did finish the day down. As you can see, $150. Not a big deal. But it's a really good example of, this. I've talked about the setup before of when it doesn't work and kind of what you want to see to really give you the conviction in that type of setup actually working. And today I did not see that. So of course the setup didn't work and I ended up eating the loss. Now, before we go, I want you to kind of watch really quickly here. I'll fast forward a little bit, try to keep the video relatively short. So obviously, with the benefit of hindsight, I know that Tesla, in fact, does fail here. So what ends up happening is longs like myself take this trend break. Maybe they even buy here when it holds trend and they get themselves trapped. And so when this fails, Tesla's going to get a dramatic breakdown. And what I want you to pay attention to is watch the bid and the ask, right? Watch the spread, watch how much those premiums move whenever we get this breakdown. So we're still looking at the 755 calls. Tesla's trading just under 755 now. Watch how dramatically the premiums on those contracts just absolutely deflate hugely when it gets that volatile breakdown. It's compounded by the fact that it is the day of expiration. So this will give you a really good idea as to, how those contracts can really move around, either going against you or going for you. In this case, it would have obviously been going against me. Now, remember that I bought that contract at $11.90. I closed it at $10.75, which meant I realized a $115 loss. All right, so $11.90 entry. Now what I'm going to do is fast forward the video just a little bit and look for that break. See if I can find it here. All right, so we're starting to break here a little bit. We're testing the trend, but we're starting to break the VWAP. So we're looking here, look at the offers at 970, 1040, bid at 920. So it's already getting, you know, getting a little bit lower from where I got in, but it's still holding. Let me get to the break here. All right, I think it's coming here in just a second. So again, watch very closly the bid and the ask. Watch how much they widen. We're looking at about 1 point on average spread between the bid and the ask. Let me pause it here. I think we're fixing to break. On average, we're looking at about a 1 point spread between the bid and the ask. But when the volatility expands, as we get this break here, you see the huge, everyone's hitting, slamming the bid here. Longs are giving up, probably some shorts piling in here. So you have all these people hitting the bid. So you're starting to get the break here. Watch how much expansion you get between that bid and the ask, and how quickly those premiums just plummet. Right? Again, remember, I bought that one contract at 1190. So if I'm still holding and wanted to mark it out of the position right now, I'd be getting filled at the bid at 715 right now, 570. Boom. Look at that. Huge drop right there. And like a 3 point spread between the bid and the ask on this huge, look at the volatility expansion right there. Look at the reaction to the premiums here between the bid and the ask. So the spreads will tighten up just a little bit as that initial reaction happens, and we get that small little bounce up here. So again, if I'm still holding from 1190 and wanted to mark it out, I'm looking at you know, $6.85, $7 right there. Horrible loss on those contracts, especially because of the day of expiration. So it really gives you an idea of just how much those contracts can move, especially on that Friday. I think we get one more wash down here. Let's see if we can catch this real quick before we go. So again, just keep an eye on that spread there. See what it does here. I think it drops down. I believe I remember seeing a low of like $4.30 or something like that. We're at 635 there on the bid. 645. There it is. Here comes a wash, 550. Look at the expansion of the volatility coming through. 560, 550. 5. Boom, right there. Look at that. Look at that. Huge expansion of volatility. Bid down to 425. Look at the ask, 745. Massive expansion between the bid and the ask there. Look at the difference between 1190 entry down to 425. And that's the only move it made right there, right? Because of that expansion of the volatility. That volatility is everything in options, guys. It really, really is. And that's one reason why I was trying to position myself a little bit early on Apple to take advantage of that volatility. And the same reason that I kept the stop so tight, and the same reason that I got out of the trade a little bit early, because it wasn't doing what I was expecting it to do. And I did not want to get caught holding contracts into a move like that goes against me. So with options, it's very, very tricky sometimes, especially trading the day of expiration. So sometimes I might recommend trading the next week's expiration. That will certainly help out. But when you're trading setups like this, in particular, like these flag break setups, when you're not buying, when those options contracts are super, super cheap, like buying weakness or, buying calls into weakness or buying puts into strength, for example, when you're trading those flag break type of setups, just make sure that you have that volume coming through to give you that momentum that you need to the upside to get that expansion and volatility in your favor to get those options contracts to really explode in value, and you really get nice returns that way. All right, guys, so I'm going to wrap it up there. Hopefully you found the video helpful. As always, if you have any questions or comments, feel free to leave those below. And again, please hit that like button if you did find the video helpful. And I hope you guys have a really great weekend. Thanks, as always, for watching, and I'll catch you in the next one. See ya.